So the basic human condition, and this is why markets tend to work the same over time. Like, when you see how people are like, oh, it's different this time. They say that's the most dangerous thing you can say in investing. It's like Mark Twain once said, I use this a lot lately, is history doesn't repeat, but it does rhyme. So what people tend to do, because human nature has not evolved that much. I mean, you can read books from you go read books from Roman times and you're like, oh my God, people were doing the same shit. They had the same ego issues, we haven't really, you're not going to be like, whoa, we were so different back then. We really weren't. Markets tend to oscillate between fear and greed. Now, the irony of all that is when people are fearful and prices are down. Now think about any marketplace in the world. Okay. Let's just say, like, what's the last big purchase that you had? Like the last thing you bought that was like a decent sized purchase for you.
Like
no judgment.
Physical thing?
Yeah.
I bought like $1 million of Bitcoin like 2 months ago.
Oh my God. I would have told you like, don't even get me on Bitcoin. Oh, actually this is a bad example because you're going to prove my point with this. Something that's not investment related. And I'll go back to Bitcoin because of that, because that's even better.
Well, something that is not investment related, I would say, does a trip count? Like I spent like $100,000 on a trip for me and my close friends, and like I just sponsored most of it. So that was a big purchase.
That's amazing. Where did you go?
America. I came here like in December to January. I was here for a month. We went to Aspen. We went to multiple places, had a lot of fun. Amazing trip.
That's epic. Okay. So let's just say that, so you were going to book your flight to come over here, and you're looking at all the prices, and let's just say that, okay, like you looked at everything, you looked at the flights, you looked at the hotels, and all of a sudden, because like the CDC, I'm making this up, but the CDC came out and just said, that's the Center for Disease Control here in the US, is like, you know what? No more masks. COVID's just fake. So everyone's excited. Everyone's going out now, and everybody is booking the trip. When you're booking your trips, all of a sudden the prices go up 50%.
Yeah.
Are you going to be more likely to book that trip or less likely in that moment?
Less likely, obviously. Yeah.
Okay. Makes sense to me. Now the flip. No. Wait, okay.
Yeah. Okay. All right.
No. Is that your final answer?
Like it's a complicated question because in my personal case, I think I'd just be neutral. If I was going to book the trip, I'd book it anyway, even if it was costing me a little bit more. But emotionally, I would definitely feel like more of a resistance to book the trip. So in that way, you can say that I'm less likely to book the trip. But it just because of the kind of person I am, I'm just going to get anything that I want to get, regardless of if the price goes up like 20-30% or even 50%.
Okay. But the initial emotional is like, whoa, let me take a step back here and evaluate.
Yeah, absolutely. I would reconsider it. Absolutely. I would reconsider it.
Okay.
Yeah.
That sounds very rational to me. Now on the flip side, let's just say like they came out and said, we just found like 10 new strands of COVID, stay in your home. And all of a sudden your trip, like literally the cost went down by 50%. Would you be like more apt to get on that trip and book it or less apt?
Absolutely. I would be more excited to book the trip. I'd book it immediately.
Yeah. Okay. Yeah. That's amazing. And that's how a marketplace, like that's a very rational, like, hey, I'm going to buy things when I get a good deal. It's on sale.
Absolutely.
Now crypto, you bought near the top of the market. The price went up astronomically.
Yeah, that's true.
So this crypto is going up hundreds of percent. Right. And this is not just you, by the way. I'm picking on you, and I could pick on myself too. But you know what? It's more fun to pick on you.
Right.
But you were more. Now everyone's excited about crypto. The price is going up like hundreds of percent. So you did what most investors do. When the price is getting higher and more people are jumping in,
right?
You were more apt to buy.
Well, I actually didn't buy because of the hype. I had actually been spending 8 months of my time studying Bitcoin. So once my confidence level in my study went really high, that is when I bought. And I bought with a long-term time horizon. So my time horizon was like 2030, that kind of time horizon. So I'm like, okay, I'm not going to try to time the market. I'm just going to buy the fundamentals what I think
Yeah.
are the fundamentals based on
There
my
is none.
study.
Go ahead.
Or well, I would disagree on that, but that would be another podcast. I think that can be another podcast.
Yeah.
But yeah, I read a lot of material, and when my confidence went up,
Okay.
I decided to buy and hold for a long period of time because I believe in the future of Bitcoin.
Okay. So funny thing is, you and everyone else I talked to has been doing the same thing. And it's no coincidence over the last 8 months, the price has risen dramatically. Now, I'm going to bet, and it's not just you, if over the same time frame, Bitcoin went down like 80%, you'd probably be less apt to get into Bitcoin at that time because there would be less validity around it. People would feel more sheepish about it. Let me tell you this.
I do see what you're saying, but I think the opposite. I think if Bitcoin really dropped 80%, I would actually sell some of my assets and buy more Bitcoin. I really would.
We'll talk.
But I do understand. Okay. I do understand. Okay, I do understand what you're saying, though. I do understand that people are less. You should actually get into it when it's when things are falling down, and people tend to do the opposite. Whenever something is going up and up, they just want to get on the train and ride that wave, and people want to get out of things while it's going down. Whereas what you should be doing is actually studying what you're getting into and make decisions based on the fundamentals, based on what the inherent value of the thing is, not based on the emotion of the market.
Well, that's exactly right. But the problem is everything it's happening right now when something's going up, and this only marketplace in the world is when you're investing money, as opposed to like going on a trip where it's obvious that it's a better deal and the prices are lower. When it comes to marketplaces, like Bitcoin or whatever it is, no one was calling me talking about Bitcoin 12 months ago when it was down, 40, 50% when we had the big decline when the pandemic started. There was none of these theories that I'm hearing today about Bitcoin, which is crazy. Now we're 12 months later and everyone's a genius in Bitcoin, but that's just, it's the madness of the crowd. And I've seen this now. For me, you got to remember, again, history doesn't repeat, but it does rhyme. This is no different than the dot-com bubble bursting, which was my first thing that happened in my career, or we had the housing bubble burst back in 08, 09. So for someone newer to investing, this feels like something new, and there's all these great theories. For me, this is human nature just acting like human nature. So the point is, the advantage that I have as someone who manages people's money is I'm able to gauge what people are feeling and now I can't predict exactly the day something's going to collapse or when it's to buy, but you don't need a weatherman to know which way the wind blows. Meaning like I can say, okay, this is exactly what the housing bubble was like 10 years ago, where the price goes up crazy and everyone starts justifying that this is this new thing. For people that haven't been invested before, this is their first time in something like this, it feels very new. But the funny thing is, and this is why I get paid the big bucks, it's not new for me. And I can already probably tell you how this is going to end. And it ain't pretty. Because
you mean the Bitcoin wave?
Yes.
Okay. What do you think about it? Tell me, what do you think about it?
It's going to end bad. It's obvious.
You think Bitcoin is going to zero?
Well, I don't know if it's going to go to zero, but it has what you call intrinsic value. And it's a simple concept. This is why Warren Buffett's the most successful investor of our generation, and Charlie Munger. We just talked about compounding. There's no compounding with Bitcoin. And I'm not talking about when you lend Bitcoin out to somebody else who's borrowing it from you and paying you. That's just leveraging. That's just leverage, like you referred to before. That's not actual. That's not like owning Exxon stock where you're getting a piece of the profits that get paid to you that you can compound over time. Or like a piece of real estate where you get the income coming in over time. Right now, Bitcoin, again, who knows? Maybe, it will become something that we use as a currency at some point. Maybe, but it's not a sure thing.
It will.
And in the meantime, what's that?
It will. I can suggest you some material to read on this. I think you'll really appreciate, even if you disagree with it, I think you'll really appreciate and understand what Bitcoin is a little bit better. It really will become I believe this might not happen, and another cryptocurrency might become this, but I believe the cryptocurrency itself will become the base layer of our financial system, kind of like 100 years ago, everything was backed by gold. So the Bitcoiners believe that everything eventually is going to be backed by Bitcoin. Now, I'm not naive enough to believe that that is for sure going to happen. I think cryptocurrency is going to be that technology where everything will be based upon in the future. And right now, Bitcoin is the leading horse in the race. And that's why I believe in Bitcoin. But I truly think that the US dollar and all fiat currencies are failing us. And one of the big problems is inflation, and our governments are failing us with their printing of their money and mismanagement of the money. And there's many issues that we could talk about. That like I said, that could be a whole another podcast in itself. But
it's gonna hurt when I'm right on this. But you got to remember though that then that's the other thing. Currencies aren't an investment. Period. Currencies depreciate over time. Real assets appreciate over time. Productive assets, and that's why when people say it's new gold, what people don't realize is gold is a horrible investment. If you look at 100-year chart on gold, it's shit. It literally is going 1% over inflation over the long term, and it's extremely volatile. So the point is, over the long term, whether it's new gold, whether it's a currency, they're all horrible investments.
Ryan, how Bitcoin is similar to gold? It's not. I'm not saying Bitcoin is.
You're buying your own bullshit. Go ahead.
It's just like gold because gold is incorruptible. Nobody can make more of it.
But it's a bad investment. But it's a bad investment. So
absolutely.
It's not an investment.
So what I'm not saying that I'm not saying get rid of all assets and get into Bitcoin. Obviously, there's going to be a place for assets, and that's going to be the main thing. But the problem with assets is it's hard to judge which asset is going to win, and you're good at that, but the average guy is not good at that, and the average guy doesn't have maybe the capacity or the time to study into it. So for a guy like that, a Bitcoin or gold is a much better place to put his to be liquid in, as opposed to cash, for example, because cash is just losing. That's the argument that Bitcoiners are making.
And that's the flaw in the argument, because again, it's actually, you think about it, productive assets over time are inflation hedges, right? So if you own a company that has profits and inflation kicks in, that means they can raise their prices. And when they raise their prices, their revenues go up. And as a shareholder, you benefit from that because you own all the assets of that company. That's why stocks inherently are an inflation hedge. That's why real estate is. That's why currencies are not an inflation hedge. Invariably,
absolutely,
Bitcoin,
I agree with that. But which companies go up and down? Companies go bankrupt too. So how do you know how long to stay in
portfolio never does. But a diversified portfolio never does.
I understand that, and you know how to do that. But what I'm saying for the average guy, for people, and also like the main feature of Bitcoin, Ryan, is decentralization. Nobody can make more of it. That's the thing. So
what? Who cares? It has no intrinsic value.
People will care when enough people have their monetary energy in Bitcoin. Then people will care, and it has been growing. It has been growing at a very fast pace. The adoption of Bitcoin has grown like it has made history in the last 10 years.
But not commercial use. It's not a joke anymore. Commercial use is not going up in the last 2 years. So there's more people gambling in it, but you using it for merchants, statistically, the volume hasn't gone up. It's still 75% of listed
There's
activity.
a long way to go. Yes, there is a long way to go. I agree.
I don't want to get hampered down on this, but the point is you're gonna be really sad later. I'm sorry, but I'll be here to give you a bear hug when it happens.